Hi, this is Dave. I'm doing another live stream. We had some breaking news in the after hours for Tesla that I thought was important just to come on live and to discuss it with you guys. If you guys hear this live stream, go ahead and give a thumbs up so I know that it's working. So today in after hours, there was news that just came out that Goldman Sachs has resumed coverage on Tesla. Now I want to go over this piece of news here. Here it says Goldman Sachs analyst Mark Delaney initiated coverage of Tesla with a buy rating and a $864 price target. The analyst is positive on the company's product lead position in electric vehicles, a market where he expects long-term secular growth. Delaney further cites Tesla's early mover advantage, brand recognition, vertical integration, as well as traction from its Model Y launch in the important SUV and crossover market. All right, so for most people who look at this, they're like, oh, okay, Tesla got an upgrade. And they think, okay, the stock might get boosted and then they might move on. But actually, I think there's a lot more significance actually to this news than that. And I kind of want to dive in deeper into what I think are the implications of this upgrade. All right, what you have is, first off, in after hours, you see Tesla closed the market at about $710 today. And then in aftermarket, it went up another 5%. So this upgrade by Goldman Sachs caused the stock to go up about $36, right? So that's pretty much like almost a $95 gain in one day, which is insanity after yesterday's huge increase as well. So if you look at the past 5 days, right, Tesla was basically at 550 or so last week, and then this week you just saw this big move up. And then to about 650 yesterday, and now you have a big move up to 710 and now almost 750 in after hours. If you look at the month chart, Tesla has just gone on a rampage from $360, right, just less than a month ago. Now it's almost doubled, right, almost to $750 in after hours. In the 6 month chart, again, it looks fantastic with Tesla, being at $250 just 6 months ago, and now it's at $700, almost $50. All right, so let's go ahead and take this upgrade apart, dissect it a bit. So we have an upgrade by Goldman Sachs. Now this Goldman Sachs upgrade is not just an upgrade from anyone or anywhere. Goldman Sachs is the preeminent investment bank out there, meaning they have the top position in terms of prestige, in terms of influence. Goldman Sachs has just been around for so long. They have some of the most capable so-called bankers and investment people there. And they move a lot of kind of the sentiment in Wall Street. Here it says Goldman Sachs is the most prestigious investment bank. It's been around 150 years. They have $917 billion in assets in 2017. And this Goldman Sachs Bank and its previous analysts have been kind of like an Achilles heel, or I wouldn't say that, kind of like a bug that just has been irritating Tesla and Elon Musk ever since probably 10 years ago, back in the day. And Goldman Sachs analysts have never been bullish on Tesla, right? They've always been bears, and not just regular bears, but they've been staunch bears against Tesla. And that has affected the mood around Tesla stock. You're talking about the most influential investment bank in the entire world has taken a very strong anti-Tesla, right, bearish stance on Tesla, and it's kind of set the mood on Wall Street in different ways. So today marks an interesting change where we have a new analyst that comes along, Mark Delaney, and he's now seems to be a big bull on Tesla. And so this is like a huge change. This is probably the first time in the history of Goldman Sachs Tesla coverage that we finally have a bull, right, analyzing Tesla. Anyways, let's take a look a little bit more into the history of Goldman Sachs analysts. So I'm going to call these 3 generations of analysts. So the first generation analysts, you have Patrick Archambault. Now for the new people who've been exposed to Tesla or been buying Tesla just the past few years, you probably don't know this guy, Patrick Archambault. But for the people who've been with Tesla since 2012, 2019, Patrick Archambault just strikes a nerve, right? And the reason is because he was one of the original kind of big bear analysts on Wall Street, and he would just come out with the most bearish notes at the exact time that would just punish Tesla. It just was it was just pure cruelty. Actually, yeah, that's a comment. Sorry, it's a mistake. But what happened was Here's an article that basically Tesla in 2013 had a big move up to $130, and then Patrick Archambault basically downgraded it, right? Gave a price target for $84, and you saw the stock dip to about $104. And back in the day in 2013, that summer, I remember a lot of us on Tesla Motors Club forum was saying like, this is the Goldman Sachs dip, right? It dipped and then it kind of just went back up. It was like a temporary thing, but still had a big impact on the markets. Now that was first generation Tesla analyst. The second generation Tesla analyst was David Tamburino now. So David Tamburino covered Tesla for quite a long time until most recently. And this guy was extremely bearish on Tesla again. And at the right times, he would just like come up with the worst ratings and price targets for Tesla. An example, 2019, right? The first half of 2019 was probably one of the most kind of toughest times for Tesla stock, right? And you had Tesla dip under $200, in fact, or under $300, sorry. And then Goldman Sachs basically lowered their price target 4 times, right, in the first half of 2019. Can you imagine that? 4 times they've lowered their price target, right when Tesla needed some help or needed some kind of, encouragement from Wall Street. Boom, right? Goldman Sachs just like clips them on the knees, right? And it was this was the history of Goldman Sachs, right? If you go back on Goldman Sachs's past price targets and their downgrades and upgrades. So check this out. So you have like, July 3rd, 2019, $158 price target, right? We're talking about 200 to 158 price target, right? April 2019, $210 price target. January 19, 2010, right? They're just like giving just like low price targets, just hitting Tesla whenever, right, they need the help. They just like hit them down. So that's the second generation kind of Tesla analyst at Goldman Sachs. Now you have a third generation kind of Tesla analyst at Goldman Sachs. And now this guy, Mark Delaney. For a while, actually, David Tamburino, for the past several months, he's been out of action. I think he left covering Tesla. And now there was this gap. And so now we have a new analyst covering Tesla, David Delaney. And we go ahead and we see his note, and it's very, very bullish on Tesla, right? He gives an $864 price target, which is, much higher than current market price. And he's saying basically there's major growth ahead. Now, there's several things I want to talk about here. Is this kind of marks a potential turning of the tide in some senses on Wall Street sentiment, because up until this point, you've had the top most influential investment bank in Wall Street be so bearish and negative on Tesla. Now you have that switched, right? You have an analyst change. It's becoming a bullish kind of, sentiment on the most influential investment bank. And now there's potential for that sentiment to bleed into other investment firms and investment banks on Wall Street. So that's positive. I think it's interesting because, as I shared yesterday in my live stream, with the Fed's quantitative easing and them releasing trillions of dollars of additional liquidity into the market, investors are looking for this combination of growth and safety. They want stocks that can grow but also can give a reasonable amount of safety. And what's interesting is, I think what you have Tesla now getting into that crowd. They're not into the crowd as super safe, kind of Google, Amazon, Facebook, Apple stocks, but yet they're growing faster. So they're into this other class of stocks that are growing very fast, but yet can give some level of safety. And now you have this popular class of stocks, right? And I shared a few of the stocks yesterday, like Shopify and Tesla, etc. And it's going to be interesting in the coming months, right? What kind of Wall Street's reaction is. But I was sharing how I think today as well, Apple, Amazon, Google, they all rose 4 or 5% in the market again after a big day yesterday. And it kind of shows that investors are tripping over their heels to try to get into these big names, these popular names, as fast as they can, because they see a turning of the tide in the economy. They see the economy getting better, basically. All right, I want to bring up one extra thing here. Is last week on Thursday on CNBC, they were noting that there was unusual options activity. And they're saying that people had bought up 11,000 contracts of the April 600 strike option calls. And I want to break that down, what that means. But I first want to show the clip because I think, when I put the pieces together, actually, I'll let you guys put the pieces together. But, it's kind of like, I don't know, it's typical Wall Street, these morally, it's just upright, ethical people, so-called, right? Playing the games. Anyways, check out this clip.
The options market was seeing some bullish activity in Tesla today. We did see more calls than puts trading at above average call volume. The trades that I was looking at that I found most interesting were opening purchases of the April 600 calls. Those were trading for about $12, and those expire a week from tomorrow. So buyers of those calls are betting that Tesla's going to be above that $600 strike price by at least the $12 that they paid. That means that they're betting on an increase of 8% or more over the course of the next week. And implied volatility, the price of options in Tesla, has gone up quite considerably. But this is an interesting situation because this is one of the stocks we can point to that's actually up on the year still, even though it is well off of its highs from February.
All right, so what we have here is we have CNBC saying there are 11,000 contracts of the 600 April strike. So what does that mean? So each contract controls about 100 shares of stock. So 11,000 contracts times 100, that would be about 1.1 million shares. So this is actually a significant amount of coverage, of leverage here. And they bought it for $12, right, per, I guess, contract or share contract. So what we have is someone paying about $13 million, right, to control about 1.1, or a group of people controlling about 1.1 million shares of Tesla. And that's a significant amount because that's over $500 million, right, worth of Tesla stock. And you have to ask yourself, like, okay, what did these people know, right, last week and by the end of the week, that they would actually, when Tesla was at about $570 or so, that they would actually fork down $13 million, right, for out of the money calls, right, 600 strike calls expiring just a week out, right? That's actually a big gamble. Short-term 1 week option call expiring just a week out, that they would pay they would pay $12. So it would have to basically expire $612 or higher, right, a week later this Friday. And this is back when Tesla was like $575 or even lower, by $550 or so. That's like a big move up, right? What did people really know, right? But let's fast forward and let's just assume they didn't know anything. Tesla opens up, tomorrow, who knows, but let's say that it's around $750 or so. That's $150 in the money option calls right now, right? Expiring this Friday. So their $12 now becomes $150, right? So that's a 12x gain, right? Just in a few days. So these people who bet last Thursday, right? They put $13 million, right, down to bet that Tesla would be higher than 612. They now have a 12x gain, meaning their $13 is like what, 150 mil, or $13 million is like $150 million, right? That's like they made what, $135 million or so just within a few days. And you have to think about it, like, okay, some people make $130 million off of this option play in just a few days, and suddenly, right, on Tuesday, but you have to go back on Monday, right, there was big buying. Sure, other stocks were going up, like Apple, Amazon, Google, Netflix, etc. They were going up about 4 or 5%, but Tesla went up like 8 or 9 or 10%. And then you have the same thing happen today, right? Apple, Amazon, Google, all this stuff was going up 4 or 5%, and then you have Tesla going up much higher, like 8%, or even went up 10% at one time. So you have basically double the buying, double the gains, right, than any other kind of stock that are out there. And you kind of have to wonder, like, what's going on here, right? Is there the possibility, right, that some of this stuff got leaked, that Goldman Sachs, right, initiating coverage or reinitiating coverage on Tesla with a big, right, price target? Is it getting leaked? Or is what's going on here, right? Why is there such big buying happening on Monday and Tuesday? Why are people buying options, right, out of the money options on Thursday in big amounts? I'll leave it up to you guys, right, to go ahead and put the pieces together. But I just kind of wanted to share some of the stuff that's going on today. Anyways, yeah, I wanted to go ahead and close this whole live stream. Maybe I'll take a couple of questions before we go ahead and actually I'll take a couple comments and questions because this is kind of interesting topic, interesting day, interesting week that we're going through right now. All right, so we have Junaid. Too much uncertainty. Even if the economy is better, it's not worth the risk, right? That's basically the prevailing attitude amongst, I would say, individual investors, retail investors. Yeah, and it makes sense, actually. If you look at the economy, you look at the future, right, a few months, next 6 months to 12 months. But I shared this in a previous video. The market is forward-looking, and you have a lot of money on the sidelines that they just can't get much gains, right, elsewhere, right? Where are you going to put your money, right? In a 10-year treasury, right? Get 0.7% back. Yeah, there's limited places. So when the economy starts to turn, when the prospects are turning, especially for these great companies, these really popular names, you're going to have a flood of people that are going to be excited to jump into those names quickly. I think that's part of what we're seeing. And a lot of retailers, I think, are going to get left out. But it could flip the other side, right? As if there's new, uncertain, new kind of downside news, we can see the markets go down very quickly. All right, here's Ken. I bought some shares around 400, but wish it goes down one more time so I can get in more. I'm a long-term holder, by the way. Yeah, I mean, a ton of people are waiting, right, for Tesla to go down, right? And it's interesting. It's like it could go down, but there's also this other kind of side of the story, this other narrative that maybe Tesla has actually turned a corner. With profitability, they were on track to get on the S&P 500 this year. Now you have the leading investment bank analysts now changing their tune. There's a lot of stuff going on. And so the downturns or the buying opportunities where you used to see massive, like when the stock went down to like 350 or so just a month ago, maybe those will be short-lived, and more rare opportunities. I'm not going to say it's not going to happen again. But a lot of times, like when it goes down, there's reasons why it goes down, right? When it went down under 400, everyone was freaking out. I think people were thinking that there's existential risk to the entire financial system, and people were just scared to buy at that time. And you think right now, oh, I'm going to buy when it goes down really low, but then when it goes down really low, you're just really scared to hold on to anything, to any of your holdings, right? You're just looking for preservation to see if you have any retirement fund left. And that kind of fear and preservation kicks in and really stops a lot of people from purchasing when it gets low. All right, please, James Jimmy, please tell me what you think about Battery Day. It will happen in May, right? Please tell us, Dave. Yeah, well, Elon Musk already tweeted it's going to happen most likely in May. I shared some comments in my live stream yesterday. Go ahead, look at that. I think, yeah, they're going to announce perhaps they're already have made their own cells and they're already in a vehicle right now. All right, cheering, should we buy now, Dave, right? So here's the thing, man. I want to lay it down to you guys honestly, straightforward here. If you're asking other people when to buy, then I don't know if you really should be in this game. I mean, I'm telling you, investing is probably one of the most difficult, high reward skills out there. And if you don't take responsibility for your own research, your own decisions, your own forecasting, your own modeling, and you're kind of like, oh, do I buy now or do I sell right now? That type of like following behavior is just not gonna, I think, get you to the place where you need to get to, right? And in my opinion, you might be better served somewhere else. Maybe doing your own business, maybe just investing in an index fund. But yeah, if you really want to kind of embrace the full potential of investing, it starts with saying, hey, how do I do my own modeling? How do I do my own forecasting? What is, right, Tesla's kind of value, or, when is Tesla super undervalued? A person, here's another person, Gerson, will Tesla stock drop soon, right? And I remember, back about a month ago, a friend texted me and he said, hey, Dave, like, and this is when Tesla was just going down like crazy. And he's like, Dave, when do you think is a good, or at what price do you think Tesla is a good buy? And he's like, 250 or 300 or 200 or 300, right? People were looking down 200, under 300 at this point, because it was just like going down 700, 600, 500, 400, etc. And I replied to him like $400, right? And the reason why I personally replied to my friend $400 is because I just do my own forecasting, my own projections going forward, right? And I see like, hey, I have a goal, right? I want to get into 10x investments, that I want to get into companies that have a clear and probable path for a 10x, right, gain. And for me personally, in 10 years, right, I could see Tesla doing a 10x gain from 400. From 5 to 600, right, it gets more iffy. I'm not saying that do they have a chance. I'm looking for a clear and probable path, right? The most majority possibility that they're going to do a 10x from that valuation. And for me, I'm not kind of one to chase a stock when I don't think they can do, right, the valuation gain that I'm looking for. But everyone needs to make their own decisions. Everyone needs to make their own valuation call. They need to do their own forecasting. They need to establish their own goals. And then you need to act on those goals rather than, I think, relying on other people to tell you when to buy, because everyone has different goals. Everyone has different risk tolerances. But anyways, yeah, this is Sung Kim, should we buy now, right? That is the main question, right? And only you can answer that question. And otherwise, personally, if I was to do the kind of like a buy now, do this, right, I wouldn't do this investment channel. The potential I see in the biggest motivation I have is to pass on to my kids abilities and skills, right? Critical reasoning, objective reasoning, and actually the skills to analyze and forecast companies, right? That's what I want to pass on to my kids, but also to anyone who's willing to be open. And that's going to take you a lot farther than listening to someone tell you to buy or to sell. I don't think that can give you enough conviction that you have. All right. All right, Hugh B. I'm currently a Tesla owner, also invested in stocks. I also invested in NEO. What do you think of bio? Well, okay, I'm confused here. Is it bio or NEO? NEO, yeah, I'm not very hot on. I think they can't take on Tesla. I think they can't beat Tesla. I'm looking to go for the market leaders, the people who have far superior products than any other people in the market. Tesla's got that. NEO, I just don't have any proof of that, right? If you want my opinion on bio, are you talking about genetics? Biology. I've been actually doing a deep dive on some of this stuff on CRISPR technology and genetics and all this stuff. And yeah, it's quite an immense field. And I just can't see right now in my current state of kind of research a clear breakout winner. Someone asked me previously, I mean, there's a bunch of names, right? That if you go through all the CRISPR kind of companies that are out there, you can go through like Illumina, which does DNA sequencing machines. And I spent like a few weeks kind of listening to all these CEOs. I just went on YouTube and started to listen to every single interview from every single CEO of like the top 5 or 10 kind of, interesting companies in genetics and CRISPR, etc. And yeah, I'm telling you, it's like a lot of times people think, well, we can't pick the winner, so you just kind of divide up your bets into 10 companies. But I'm just not kind of comfortable with dividing up, my bets into 10 mediocre companies or 10 just so-so companies. I want a clear winner, and so it requires a lot of research. I'm still researching it. My wife says I should actually interview these guys directly for my channel because I need to go deeper, man. I need to ask them really clear-cut questions, right? Get to the chase. Like, see which company is really in the forefront, right? That's what we need, actually. We don't need just a list of 10 companies that are doing CRISPR or DNA sequencing or whatever. We need the clear winner, the clear thought leader, the clear execution leader. That's what we need in that field. All right. Can this be just a dead cat bounce? Yeah, I'm seriously like, yeah, I'm actually glad that I'm not too focused on short term, actually, personally. I have, my long-term holdings. I kind of focus on that, on the long-term picture. I'm okay with big swings, right? I'm okay, actually, personally, with the stock going down 50%, 70%, and then shooting back up, right, 100%. Like, all that stuff doesn't bother me that much because I have got a long-term perspective. I'm not really focused on necessarily the stock price. I'm more focused on the number of shares I retain over a long period of time. That helps me. But yeah, I think the more focused you are short term, the harder it is to hold a big long-term position. And the reason is because in the short term, there's a lot of volatility, and it really kind of warps our thinking into trying to preserve, right, those gains in the short term. And I think it's really difficult to have kind of a dual-minded kind of mentality where you can have a long-term view and a short-term view and kind of hold them together. I think you kind of need to have a preference, right? You kind of lean toward one, either short-term or long-term. And I think generally speaking, people lean to the short-term and they're influenced by the short-term and they make short-term kind of focused decisions. And because of that, the clear long-term winners don't really stand out for them. And I think the biggest ultimate kind of decision or value in decision making with investing is going to be which companies you choose, which are going to be the true long-term winners. Which companies are going to be the Amazons, the Apples, the Googles, the ones that really do that 10x or 50x or even 100x. To kind of take a step back in history, take a step back from the 6 month or even 1 year view, but take a step back to 2 year to the 5 year view and see where is the future headed and see which companies are really positioned to become, the next big thing. I think what was helpful for me back in 1998, 1999, back before the dot-com, boom, was I really got into kind of the beginnings of the internet and started to understand like the potential of what this all was all about. And back then I was able to start to follow the most cutting edge companies and to see the potential of how it would reframe and reshape the entire economy and our entire lives. And while it took a bit longer than some people had expected it to take, the internet is and has reshaped our lives and is going to do so for another 10, 20, 30 years going forward. And these massive changes are often underappreciated and undervalued because we're so short-term focused. But those who can take a step back and see these long-term kind of changes and the magnitude of change that is happening and the companies that are taking advantage of those changes, I think those people are going to come out the best with investing, the long-term view. All right, Samantha the Cat. Dave, what do you think of security lending programs? Do you use it with your Tesla shares? Yeah, I mean, personally right now, I'm not because, there hasn't been that much demand for, borrowing my Tesla shares. So I personally don't do it. If there was a demand and there's decent interest rate, I probably would consider it. Junaid, battery day will be spectacular but misunderstood by analysts, same as autonomy day. Yeah, I think a lot of people are saying, oh, battery day, that's when the stock is going to go up. But the reality is like, that's what retailers think, right? That's what individual investors think. They get really excited by kind of these presentations and by the future and all this stuff. But I'm telling you, these analysts, it's not just analysts, these big funds, they have a different mind. They're not like, thinking 10 years down the road, right? Like Elon Musk say, oh yeah, we're going to do 20 gigafactories in 10 years. We're going to do like 15 million cars, all this stuff. And the individual retailers are like so excited about it. And they're just like buying, stock in after hours and thinking that this is going to be the start of a mega rally to like whatever, to the moon. But I'm telling you, big money and funds and analysts are thinking completely different. They're really looking out 1 year to 2 years out, right? I mean, sure, they might have some type of, ideas for a little bit further out, 5 or 10 years out, but that really doesn't play, I think, a huge factor in their current kind of like strategies to buy or to price Tesla or any company, in fact, right? These analysts really are trying to keep their job. They're trying to outperform the market. They're trying to look for what's going to happen over the next 1 to 2 years. And for Elon, when he does these autonomy day presentation or battery day presentation, he's not thinking 1 or 2 years out, right? Elon is making a case for the next 5 to 10 to 15 years. That's going to get individual investors excited. Will it get hedge funds excited? I don't know. Will Elon Musk really announce something that's revolutionary that's going to happen within the next year or so? If so, then yes, it could really change the sentiment and really get funds excited. If not, then it might not. But who knows? Maybe this time will be different. Maybe people, and not just individual investors, but maybe hedge funds will get excited about battery day. A lot of times it also depends on the sentiment around the stock. Right back with Autonomy Day in April of 2019, you had Tesla just have a miserable Q1, right? I mean, we're just talking about just a terrible Q1. Sentiment is down in the dumps. And then you have Autonomy Day and everyone's not really into it. Everyone's not really believing, right, the promises and the plans for Tesla. So sentiment around the stock going into the battery day is going to be important. All right, Yasser Bazbaz says, do you trade around your long-term positions, sell covered calls, etc.? Yeah, like back in the day, yeah, I did a lot of trading, selling calls, buying calls, spreads, you name it. I was like buying up all these option books and courses, and in and out of positions, doing all that stuff. I was trying to maximize my basically long-term share position, getting a lot of leaps, doing all sorts of stuff. And over the years, I've actually kind of like retired in a sense from all that stuff, because yeah, there's like kind of a risk reward thing going on, where it's like after a certain point, it's kind of like you do expose yourself to more risk, the more leverage, right, and the more things you try to do. And so I think after a while, yeah, for me, and just this, with considering the size of my position and where it's been, most of my position, in fact, is like bought under like $35, right? That's basically, and it's actually a sizable position. It's I went in as much as I could, and then I built up more positions through leaps and through other kind of ways through 2014, 15, and 16 at the right times. And so yeah, for me, it's just kind of like I'm at a point where I'm happy with shares, right? I'm like, I'm not really welcoming the extra risk, but I do have some hobby accounts, or yeah, hobby account or here or there, where I'll play around with some stuff. Yeah, and I'm also looking to, yeah, this coronavirus situation has really changed my outlook on kind of investing, and yeah, I'm still processing a lot of things, but I'm looking to also kind of expand my investing kind of exposure as well to companies. All right. Dave, I project $1,200 after battery day. Well, yeah, good luck, man. I hope you're not putting up a lot of options. Guotan, do you care about technicals? Yeah, actually, surprisingly, even though I think the money long term is really made with the fundamentals, doing both the quantitative and qualitative analysis, technicals actually are quite fascinating to me. It's just like I don't think, obviously they're not foolproof, but it's just kind of fascinating to see how technicals, how charting and price action really kind of are able to describe certain behaviors, right? If you take in consideration volume as well. And so I'm actually like, a student of technicals as well. I've read a lot of books on it, gone through courses, and over the years, I've done my own technical analysis. I just don't rely on that as the major factor for my long-term buys, especially. I think fundamental, especially valuation and analyzing companies, is the way to go. All right. I can go on forever on this, but I want to kind of end here, and want to thank you guys for joining this live stream. And go ahead and if you can like this video right now, we've got 73 likes right now, but the more likes that this video gets, the more kind of exposure the video gets. I think live streams don't seem to get as much exposure as kind of regular videos for some reason. So if you can do this video a favor, please like it if you're watching especially. That's going to help kind of spread the word, help the algorithms kind of share this video with other people. And if you have any other questions, please leave a comment in the video section as well, and I'll go ahead and look through the comments. And we'll see you guys in a later video. Take care, and we'll see you guys soon. Bye.